Good afternoon, welcome to India Market Close this Wednesday afternoon. I'm Hersh. Actually, it's a Thursday afternoon, apologies for that. But I'm Hersh. Sayta, with me is Niraj. Shah. Quickly on to where we are with regard to where the benchmarks are at. We're slightly in the red, just about marginally, slight negative bias, so around a 0.1% lower on the Nifty 50. 24,300 holding at least as we speak. Let's pull up the heat map, see what's essentially buzzing. And it's been a puzzling sort of a day because we started off in the green, we slipped into the red, and now we've seen a bit of a recovery. We'll come to that, but look at some of the names which are buzzing. Far and few in terms of big buzzers, but you'll see utility, especially oil and gas stocks doing well, 2.6, 2.2 odd % for BPCL, HPCL, ONGC as well as Coal India also doing fairly well. You have some consumption names doing well, something like an ITC and Asian Paints as well doing decently. Among the losers, the top of the pile is Bajaj Finance and Nestle. Let's though pull up the sectoral heat map and see which sectors are buzzing. We had the Nifty Bank, which was well in the red, around 1% or so lower. The Fin Nifty was under pressure. PSU banks were doing well, pretty much through the day, but where there was pressure was the private banking side of things, but that seems to have recovered a bit. And there you go, we're seeing flat on the Nifty Bank. So that recovery within the Nifty 50 has come largely from the private banking side, likely, and I'll come to that as well. Let's pull up the graph for the Nifty 50 if we can, for the intraday graph if we can, and we'll try and analyze that along with the Nifty Bank chart. If we can pull that up straight off the bat, there you go. We've seen a fall and thereafter a bit of a recovery through the day. And we can pull up the Nifty Bank as well, likely very similar kind of a chart pattern. There you go. We've seen a recovery, and that has been led, it seems, by the Nifty Bank. So the banks have really led a bit of that recovery. But let's pull up the small and mid cap indices, the broader markets, because those have been outperforming the Nifty 50 right from the morning. 1/3% higher on the Nifty mid cap, the small cap index as well. If we can pull that up around 0.6%. So positive on both of those. So the broader market's doing fairly well. If you can pull up the advanced decline, likely that will also reflect positively largely. There you go, 1,300 to 700, 750 odd declines. That's how we're currently placed at. And last off, if we can pull up the BSE 500, just to kind of cap off some stocks, some specific names. GE Shipping is up and away. Mazagon Dock up 7%. You have something like a Data Patterns as well as Oil India doing fairly well. Raymond, maybe not, that's an aberration actually, but because it's up roughly around 5% after the adjustments with regard to the demerger that it's having. But those are some of the other buzzers in trade. Let's quickly pull up and talk about some specific stocks if we can. We have TCS's earnings and numbers. We have Tata Elxsi's numbers as well. If we can quickly pull up those two. We have a Blue Star's numbers also. On brokerage upgrade side, we have Ambuja Cements. We've seen target price increase by Nomura from 500 to 780. We've spoken about that extensively through the day. 1.8% higher. We'll cover that as part of closing if you've missed it. Also, in terms of other brokerage upgrades, couple of good ones that we've pulled out for you in trade today. If we can pull those up, we had something like a Voltas, which has a city note on Voltas, as well as Sona BLW, both of which are buzzing on the back of positive brokerage notes. Sona BLW, of course, up 4% on the back of that Bernstein note that came through, and Voltas is again a city note, a positive note by Citi. Outside of that, some order wins. Thermax on the back of a tie-up, up and away. HPL Electric order win. That one is completely hit it out of the park, 20% higher, locked on upper circuit. You had an Ahluwalia Contracts, which is also buzzing in trade. RVNL, as always, with every order win, the stock just continues to climb higher, 4% higher on RVNL, if I'm not wrong. There you go. And you also have Tata Elxsi on the back of numbers. We bid 2% lower on the back of a difficult set of numbers which came through, margins taking a bit of a dip, as well as some one-off tax benefits which they were availing till the last quarter have now expired, and therefore the PAT also down around 6% or thereabouts. Niraj.
Well, let's take it to our guest then. Hersh Kushbora, founder of kushbora.com, joins in, as does Rajesh Palavia, SVP Technical and Derivative Research at Axis Securities. Gentlemen, thanks so much for joining in, both of you. Really appreciate your time. Kush, how are you viewing the setup today? Indecision, or is there a trend?
Hi, Niraj. Hello, Rajesh. First of all, very good afternoon to both of you. Well, I think this is par for the course. This move is par for the course for two reasons. One, what's happened is that the Nifty and the Bank Nifty both have respected the support zones. Nifty has a support zone from 24 to 24,200. That's been respected for the day. Bank Nifty has a support zone from 51,800 to 52,200. Within that range, but that's also being respected. Now, why do I say that? There are two key triggers for the markets. One is the results and the other is the budget. Now, results just on the corner. Nobody wants to take a big position on either side, and hence, the kind of moves that we are seeing, which is flattish on the Nifty and the Bank Nifty, both are perhaps par for the course. How I read this is that till the time these support zones are maintained, which is 51,800 on the Bank Nifty and 24,000 on the Nifty, I think we could consolidate. We could be sideways, maybe mild negative bias, but nothing to worry about till these levels are maintained.
Mm-hmm. Okay, Rajesh, how are you approaching? I mean, this morning I was talking about the possibility that ahead of TCS, I attributed it to TCS numbers, that ahead of TCS, we'll not have very large movements because the markets would want to see if IT delivers on generative AI, and that might have a bearing on upside and downside for TCS and the pack as well. How do you view the day today? Would you take any index trades, or is it largely stock specific?
Good afternoon, Niraj. Good afternoon, everyone. So for index, it's sideways behavior for the day. Looking at the data also, the major put-based concentration is placed at 24,300, 24,250 strike, and call concentration is for the day it's at 24,300 to 24,350 only. So very tight range for the day. Until Nifty not crosses about 24,350, there won't be any major move or any kind of short covering won't be trigger during the day. So I think looking at data setup, I think it's going to be a muted weekly option expiry today, and Nifty may remain in the range only of 24,300 to 350 only, and we can see a expiry in between only. So I think index-specific trade opportunity is not there for the at this moment, but yes, stock-specific opportunity is there. I think a lot many sectors from oil and gas, FMCG, shipping companies, all this even sugar space, all this space are showing good traction, and a lot many stocks are showing breakout on near term as well as on the short term structure. So I think stock-specific action likely to be there now, and one should focus only on the stock. Index would be sideways for the day.
Got it. Okay. Specific stocks first, and then we'll talk about some of the key pockets. Rajesh, to you first, your stock ideas for the afternoon.
Yeah. So first stock is from oil and gas sector only. That is ONGC. Very strong breakout in the last week. Falling trend line breakout was there in previous week, and follow buying action is taking place. Stock has shown a long built up series on series. Looking at the overall structure, we believe that ONGC can outperform, and we can see a target towards 315 to 318. Your stop loss should be placed at around 300 rupees. The second stock is from the FMCG pack, that is ITC. Very strong breakout, very strong bullish weekly candle we are seeing. And looking at the breakout on the ITC after long consolidation, there is a breakout on a weekly chart. That clearly shows that here we can see continuation of up move. 475 to 478 is the near-term target where we are projecting, and one can keep a stop loss of 448 to buy ITC. And the third stock is from the mid-cap bank, that is Federal Bank. Continuation of uptrend, series of higher top, higher bottom formation. Stock is moving in up-sloping channel on daily chart. And looking at the overall structure, we believe that here we can see continuation of uptrend. The stock is almost trading at all-time high trajectory. 204 is the next target where we are focusing, and one can buy with stop loss of 187.
Kush, your ideas for the afternoon?
Well, let me start with the one that's a common one between Rajesh and myself, which is Federal Bank. This stock defied everything else that's happening around it, in the banking space. So, we do believe that this momentum could well continue up until 200, 201 kind of levels. So that remains, our target. 189 is the stop loss. So fairly similar levels as well. The second is from the cash segment, which is Sarda Energy. This stock also has seen, a pretty sharp run up in the last couple of days, but the volumes have also, come along. And also, if you see the resistance zones of, 270, 275, the stock actually taken those out and, holding above that. If it does continue trading here, then the closing also might happen above that. This is also a very strong signal. So from a near-term perspective, 288, 295 are the targets to look at. 269 is a good level to place your stop loss.
All right, thanks Kush. Let me quickly go across to Puneet because he's standing by with the stock of the day. Sona BLW is our stock of the day, up and away in trade. We had a positive note coming in from Bernstein. Decent upside as well. Puneet, take it away.
Yeah, thanks for that. So they have maintained the outperform rating on the stock with a target price of 780 rupees per share. This is, of course, a 13% upside from the previous close, so around 6 to 7% still goes out. They have mentioned that, the company is definitely benefiting from the transition to EV mobility, and that is one of the mainstays of their positive outlook on the company. Battery electric vehicle or BEV revenues currently consolidated to around 29 to 30% of total revenues. They have, guided for this to go up to 45% in the next couple of years, and the management has previously also guided for 70% of their total revenues coming from the BEV space by 2035. That's been one of the main positives as well. When you look at some of the other details that Bernstein talks about, they already have 30 clients catering to the EV space and have also increased their products in the hybrid space as well globally and catering to a lot of segments. Now we saw that the UP government notification which benefits companies like Maruti in India, but they've already been making products for the EV hybrid market as well. They have also developed new traction motor for hybrids and are already selling these motors as well globally, which we spoke about. Now, currently they are expanding their portfolio, which has they've done that in the last 5 years as well, which has led to revenue growth of 5 times between FY19 and FY24, and going forward as well, this is likely to continue. Finally, the company has also gotten the PLI benefit of 10 to 12 crores, and one of their products, the traction motors, has already got the PLI certificates as well. Finally, on the current order book to trailing revenues, it has 7 times its current revenues as its order book. So a company does a revenue of 3 to 4,000 crores. The order book stands at 22,000 crores, and 79% of this is coming from the EV space. So really positive note coming in on Sona BLW. The stock is not cheap by any means. They're coming at roughly 42 times 2 years forward, but a positive note on what the company has done until now in its businesses. Back to you.
Well, thanks so much for that, Puneet. Really rounding up Sona from a fundamental perspective, 42 times 2 years forward, and of course book to bill very, very strong. But let me come to you, Kush, first. Your sense with regard to Sona on charts. Stock is up and away, almost 4% higher.
Well, the run up in the last couple of weeks has been rather stellar. The only concern now being that it's come close to those resistance marks, which is 720, a level which it has not been able to at least close above for the good part of this year. So my suggestion is that if you've got an existing position, you should continue to hold. Even today, if you see, there's been a sharp profit taking from higher levels of 744. So the stock does have some room on the upside. So if you've got an existing position, you should continue to hold. In fact, you can move your stop losses higher now. 695 is where you should put your trailing stop losses. For an existing position also, it doesn't look to be as bad. Although I would prefer to perhaps give it one more day, see if it actually does close above that 720 mark, or goes into that consolidation kind of a mode. So for a fresh position, just wait for one more day. Existing position, you can continue to hold. Your targets will remain, 745, the top that it made today. Once that is taken out, 770 comes into play, and 695 should now be your trailing stop loss.
Got it. Rajesh, any thoughts with regard to Sona?
I think, yes, there is a possibility that, once the stock manages to cross above 720-25 zone on a closing basis, then there could be a follow-up buying action. We can see a very strong buying action throughout the day in the stock. So volume breakout is already there. the stock. So I think 770.25 is the level where one should keep eye. If it crosses, then possible target we can see towards 760, 780 also. So overall, technically, there is a high possibility that we may see another round of rally in the stock. So at this moment, we would suggest those who are already in the trade can hold the position with stop loss of 705.
Got it. Thanks for that, Rajesh. Time to slip into a very short break. But as we do, here's the Petroleum Minister Hardeep Singh Puri. Here's what he had to say about India's efforts in oil exploration, import challenges and more. Speaking at an event, he called on officials in the Director General of Hydrocarbons to step up oil exploration. Listen in to a slice of that.
Our sedimentary basin is approximately nestled with approximately 651.8 million metric tons of crude oil and 1,138.6 billion cubic meters of natural gas. And this is where we come to our failings. Only 10% of this sedimentary basin is currently under exploration today. After the award of the blocks under the forthcoming OALP rounds, it will increase to 16% by end 2024. While this is good progress, 6% in one go, it is not enough. I wish to use this opportunity to lay down the gauntlet, including my friends at the DGH, to step up. The focus of our exploratory endeavors must pivot towards discovering yet to find resources.
Welcome back. Thanks for staying tuned with us on India Market Close here on NDTV Profit. one stock that's been in focus over the last couple of weeks, continuous news flow trickling through. We had Yes Bank. Now you're talking about one, a rating upgrade, of course, two, a possible divestiture from SBI's point of view, as well as a new promoter likely from Yes Bank's perspective. Of course, as of now, it seems that most of those so-called, at least what Yes Bank is calling rumors, is not found to be confirmed yet. So still awaiting that promoter switch, if at all that were to happen. But moreover, just the rating upgrade also keeping the stock a buzz, 4% higher. Kush, your views with regard to Yes Bank on charts now looking very interesting, because the kind of run-up that it's seen has been very strong.
True, Hersh, but so's the fall. These stocks pretty volatile. One could actually just put it in the Vodafone category as well, at least in terms of the retail participant interest, if not anything else. So we've seen a fair degree of sharp moves on this stock. While we've seen some good days, the following moves have really been missing. Also, there is a trend line resistance close to the 27 mark that I'm witnessing. So from my perspective, for an existing position, if someone's got, you can continue to hold with a stop loss of about 23.50, 24 kind of levels. But for a fresh entry, I would suggest hold up. Once it sustainably closes above this 28 level is when you could consider. But for now, existing positions can be held. No new entries suggested, and it's a fairly volatile counter, as I said at the beginning. So it's not for the faint-hearted.
Well, the other stock in focus is Raymond, which has witnessed wild swings post the lifestyle demerger. The stock was at various degrees of being in despair to being in triumph as well. Anushi joins in with more details of what this entails for a Raymond shareholder. Anushi.
Hey Niraj, so you've very correctly put it that it was indeed in wild swings today. So we did see Raymond being locked in an lower circuit in the earlier part of the day, while now after that it has recovered and is locked in an upper circuit at a price of about 2001. Now this is happening after the company turned ex-date for demerger of its lifestyle arm, which is Raymond Lifestyle. I'll just go quickly to the swap ratio of the lifestyle arm. So 4 shares of Raymond Lifestyle will be given for every 5 shares in the Raymond company, and this lifestyle business is expected to be listed in the next 2 months itself. So focus remains there. I'll also talk about the valuation that is expected for Raymond Lifestyle. So based on the share price adjustment we saw today in the pre-open, it pegs a valuation, pegs a price of about 1,202.65 per share, while its total value then comes up to about 6,400 crore. So if you go to the FY24 breakup of the company, this was the biggest contributor of the Raymond business. It contributed to about 68% of the revenue, while engineering business and real estate comprise of 15% and 17% respectively. But that is not the only demerger that we have in cards. So right now, Raymond consists of the real estate business and their engineering business. But real estate is another business that wherein the demerger is expected sooner. So here the board has approved demerger for Raymond Realty as well. So for the same, we'll see 1 share of Raymond Realty to be given for every share of Raymond Limited held. So post demerger, we'll be looking at 3 entities. One is as listed lifestyle business, real estate, along with this Raymond Limited, which will now comprise of the engineering business and the JV which they have with the denim business. Onto the management guidance for this company, if you have to look at, so for the lifestyle business, which will come in next 2 months, they have pegged a 12 to 13% of a revenue growth going forward, while EBITDA margins are expected to pick up from the 15% level and scale to about 18% going forward. Now, what remains on the focus for the business is their suit business, wherein they're putting in about 200 crores and going to expand it further. So this is the whole scenario that we are looking at Raymond, why it is going through these wild swings and what we can expect in future for the same.
Okay. Well, wild swings, difficult to give a technical perspective, but Anushi, while you are with us, so I want to ask our guest about Raymond, really, frankly pointless, but just keep in mind, and with the various reasons that we spoke about, Raymond has been active, but there are some more stocks which are also active in trade today. Anushi, what else is on your list?
So, right, Niraj, so I've picked stocks based on their order wins today and how they're buzzing in trade. I'll start off with the biggest one first, which is HPL Electric. It's about 20% up in trade today. Now, this was after the company received a letter of award for about 2,100 crore. And this order is from their regular leading consumers. And this is for the supply of smart meters in the normal course of business that they're expecting. Now, this is a fairly large order if you have to consider its order book that stood at about 2,000 crore in May 24. So, we are almost seeing this doubling down with just one order itself. If you look at the market cap of the company, that's about 3,300 crores. So this shows the kind of significant order win that the company has received. Now, moving on to Ahluwalia Contracts, they've received an order of about 838 crore. This is for the construction of new terminal buildings and some other related works. And again, this is also for the development of Lal Bahadur International Airport in Varanasi. Again, the execution timeline for this is for 3 years. And if you look at the order book size of the company, that currently, as of March 24, it stood at about 11,000 crore. The company also won another order of 572 crore earlier this month. So, and if you look at its FY24 revenue, that is about 3,850 crore. The last one on the list is Kalpataru Projects, wherein they've received a 2,995 crore, almost a 3,000 crore of an order. This is for various of their segments, which includes the transmission distribution business, EPC order, as well as the building and factory segment in India. Now, the order intake with this new order in place comes to about 6,178 crore. So, if we go back to FY24 period and compare it, the total order book that they had reported in FY24 was about 58,000 crore, which was already at a 27% growth, and that secured orders up to 30,000 crores in FY24. So, some strong order wins on cards, and that is why we are seeing the stocks reacting in trade today.
All right, thanks for that, Anushi. Thanks for staying with us through all of that. But let me quickly take it across to Rajesh this time around. Rajesh, plenty of stocks to talk about actually on the back of order wins. At least there's plenty of action happening, even though we've just about started earnings, or we're just about ready to kickstart earnings today if TCS is the benchmark. Let me first start with Ahluwalia Contracts. 5% higher. We've seen some of these infra stocks do very well. What's the sense now? Ahluwalia hasn't moved in comparison to some of the other infra stocks, but give us your views with regard to charts on this one.
So Hersh, charts are very strong. Stock is in uptrend across all time frame. The way stock is moving on monthly as well as on the weekly chart, that clearly shows that whatever minor dips which we are getting in the stocks are attracting the buying interest in the decline. So I think buy on dip should be your strategy in this stock. On the downside, the major support area is placed at around 1370, 1360 zone. That's the immediate and important support area for near-term to short-term perspective. So until the stock not slips below to 1360 level, I think one should remain on the long side of trade. On the high side, stock is since last 3-4 trading sessions, stock is now penetrating to its previous swing high of 1540. That's the important level to watch for on the near-term perspective. Once his stock manages to cross above 1540, this rally can extend to 1650 to 1700 also. So I think one should hold on their long position. Even at the current market price also, one can deploy some of their short-term investment with stop loss of 1440, upside target 1600 to 1650.
All right, Kush, with regard to the other one, RVNL, now this one, 5,000 crore of market cap gained over 150 crore rupee order. Talk to us about this one on charts. What are technicals really indicating? Fundamentals clearly do not seem to be aligned with at least the order win that has come in today.
So, Hersh, one of those times where the technicals and the fundamentals sort of, marry. Overbought territories for a while now, have been there, but, still gaining traction. This is not, a stock where you'd want to consider a fresh entry, no matter how high it goes. As I said, for me, some of these names have gone into a category where you are quite okay, perhaps sitting out and, getting that FOMO feeling rather than entering and perhaps seeing, some of these stocks down 10, 15%, if not now, maybe, a month, 2 months from now. So overbought territories for sure. I have maintained that view for the last, week, perhaps a little more. As far as the levels go for, someone who's got an existing position and still riding these, I think you'd be better off placing your tight trailing stop losses at 580, 590 kind of zones. So continue to ride this momentum, but fresh entry not at the moment.
Got it. And would you have a view on HPL Electric, because that's 3,500 odd crore market cap, but again trading at some slightly higher elevated valuations. Kush, views on HPL Electric, if any?
So Hersh, I must say, a very interesting find. This stock's not been on, a lot of traders or investors' radar for a while. Not even my radar, to be, completely honest. But the kind of moves that I've seen on this one are very encouraging. At least from the mid March kind of, time zones, the stock had a very steady up run. Was forming a base for a big breakout, and that we've seen today. The stock's locked in upper circuit, so you won't be able to get, too much of quantity even if you tried. But despite the kind of sharp up move that we've seen today, there is still some room left on the upside. Across time frames, the stock not hit the overbought territory. So while the valuations, as you say, might be a little stretched, on the technicals, I think there is room for at least another 8 to 10%, perhaps a little more as well. So tomorrow, if you do get this stock around those flattish levels as today, by that I mean the closing levels as today, then you should perhaps consider entering into these. Your stop loss here would come in at 535 levels. As I said, the target would be about 10% higher from here.
All right, 10% from your 3.5 bagger already over the last 12 months. But it's time to slip into another short break. As we do that, here's some market opinion. Even with consumer discretionary trends facing pressure, MK Investment Managers Manish Santhalia remains bullish on premium two-wheeler segment. That's the segment he's bullish on. Here's what he had to say. Listen in.
More bullish on two-wheelers, and within the two-wheelers, the premium segment of the motorcycle, which is 125 plus or 150 plus, going up to 350, 400 cc. There, I think the premiumization trend, if you were to look at from a medium-term perspective, looks very, very sound. And that opportunity is going to play out, and you have the likely players, 2 or 3 of them. You have international players like Harley and Triumph also come through. Obviously, looking at the premium end of the motorcycle, starting to look very good as far as the opportunity set is concerned in terms of growth. I was just doing some numbers. India has some 57 sectors. And, if you take the mean valuation of each of these 57 sectors, I mean, hardly 10% or 5 or 6 sectors would be at some comfortable valuation zone compared to the last 10 years mean valuation. The rest 50 sectors would be trading at higher than 10-year average mean valuation. So that is the state of things as we speak. And SIP flows, which is basically a smart institutional money, keeps piling on. 20,000 odd crores SIP flows. I mean, as long as that continues, you got to pick and choose between the broader markets. India has a long runway to go from here. Obviously, the medium-term outlook is definitely bullish, and even the long-term outlook. But problems in individual sectors will remain.
Welcome back. You're watching India Market Close on NDTV Profit. We've Agam standing by as always. It's 3 p.m. and he's going to break down the FNO cues for us today. Agam, what's the FNO data indicating?
Well, Hersh, it's been a strange sort of a day because, well, of course, not without a fair share of choppiness. Because at one point in time, we saw the Nifty test around 24,200, and since then, we have seen a recovery. It does seem like we're going to likely close around the 24,300 mark, where the open interest hasn't changed as much for the Bank Nifty as well. We've seen, well, flattish movements, and while that has been choppy, it's been relatively range bound. Of course, 2.5% added in open interest. As we move into the options, market and take a look at there. Here, of course, and perhaps unexpected lines, we're looking at a lot of traction around 24,200, 24,300 in terms of calls and puts, even as we talk about the stocks. Again, it's a mixed market. So when it comes to stocks, we are looking at longs in Infosys, Britannia. Infosys actually is just marginally in the green, remember. But we will see a reaction not just on TCS, but also on Infosys tomorrow as we see the earnings from TCS come through. And among stocks which are seeing unwinding, actually a lot of short covering coming on. So among them, we have India Cement, which actually stands out, as well as Balrampur Chini. India Cement is a wait and watch because it may just come out of the FNO ban. So that's something to remember. India market, in general, as far as the markets are concerned, fairly evenly poised between advances and declines. It's been a day. It's been another day of consolidation, I could say that, and it's again a wait and watch as to where the direction of the indices go. But today was a fairly ordinary expiration for the weekly contracts.
All right. Thank you, Agam, for that. Let me also welcome on board Deven Choksi, Managing Director at DR Choksi Investment Managers on fundamentals, joining us as well. Welcome, sir. Mr. Choksi, I want to try and understand, some of these names, something like an HPL Electric, something like, we've had a slew of order wins which have trickled through Ahluwalia contracts, RVNL, and the like. Any names that interest you within the infra space, budget play, anything that interests you?
Yeah, good afternoon. Well, certainly, I think the government being the largest spender today, they are putting across significantly large sum of money for the infrastructure. And the companies which are in the power generation and in the power distribution space, along with, I think, the players who are in the capital goods and the ancillary or the ancillary space, they are the ones who are basically going to get the major amount of benefits out of the entire offloading of the new contracts, I think, which are coming from respective corporations. In my viewpoint, I think this is going to be absolutely a good roadmap going forward next 3, 5, 10 years, maybe in some of the cases. However, I think the major issue today in the market is not the business. The business is understood that most of the companies are cornering good size of business. The challenge is in execution, and that execution risk probably the market is not factoring today. In my understanding, some of the mid-size and small-size companies, they are most vulnerable to the execution risk, because even though they may have larger business to talk about, whether do they have sufficient amount of bandwidth to execute this particular businesses in a given period of time remains, I think, a challenging task and proposition for most of the investors who are waiting outside and monitoring it. So I think that is a challenge that I see it. I'm not seeing business as a challenge. I believe that I think that condition will have to play out. Maybe I think if absolutely very rich valuations are there in the marketplace, they are subject to, I think, a significant amount of execution risk that these companies are assuming.
Deven, good afternoon. Both our experts are very constructive on the energy pocket, different forms, but constructive on energy. I would love to understand from you fundamentally, are you constructive with how energy stocks are shaping up currently? Are you upbeat on upstream oil, for example?
Yeah, Niraj, I think good afternoon. Well, I think one will have to remain constructive about this particular subject, because in each of the areas, I think where probably be it conventional energy or be it renewable energy, I believe that I think the demand that the country is going to have, given the kind of program that we are executing currently, both on the infrastructure side as well as on the industry side, And at the same time, I think some of the larger initiatives like data center initiatives that we are taking up, I believe that I think we are going to be consuming significantly large amount of energy. That is undoubtedly understood now. The challenge I think that we are probably seeing is in the area of execution, like I was mentioning a little earlier as well, that I think in most of the cases, probably I think the order books are released, the projects are going to get executed, but they are going to take time. They are not going to get executed just in 1 quarter or 2 quarters. They are long drawn projects, I think, which will take time. That's where probably I think I'm slightly more mindful about. I'm not at all doubting the possibility and prospects of the generating companies, not doubting even the prospects of distribution companies, not doubting the prospects of renewable companies, even for that matter, green hydrogen business. I believe that I think each of these areas will have significantly large amount of opportunity going forward, including in the oil and gas business, I think where the opportunity size is going to be I think, steady and higher. But the fact is that execution, suppose if you are giving very large premium to individual companies in the marketplace, and if execution remains at a slower pace, probably I think these premiums will have to come for adjustment or re-rating at some point of time. And that's the cost of the caution that one will have to be mindful about when they operate in the marketplace.
Okay, well, certainly it's a pocket that to watch out for. Now, a full tilt towards IT. I will take both the technical, fundamental and the derivative view because TCS coming up with the numbers very, very shortly. Rucha Johnson to tell us what should be anticipated. Rucha, good afternoon.
Good afternoon, Niraj. TCS will report its numbers post 3:30 today. And let me take you to the numbers which are expected by the street. Revenue is largely expected to be muted growth around 1.5%, but margins are expected to fall likely due to wage hikes that are announced by the company. Now, a company had mentioned about achieving the 26 to 28% of the margin target in the near term. That is what we'll look out for. We'll also look out for the discretionary demand commentary. Obviously, that is with all the IT sectors that we'll look out for, and also how are deal wins getting converted into revenue, because remember TCS had mentioned about deal wins getting cancelled and also paused over the last few quarters. Deal wins are expected to be healthy around $9 billion, and also talking about the BSNL deal, the ramp up of this deal and its conversion into revenue is also to be watched out for. So all in all, TCS muted numbers, but what is important is the commentary by the management. Call is scheduled at 7 o'clock today.
Okay, thanks a lot for that, Rucha. Keep an eye out for this. First, the trade perspective here. Now, Rajesh, I'll come to you first. It's always difficult to trade a stock, and a big one at that, ahead of its results. But if I were to put a gun to your head and ask you, what would your trading strategy be on a TCS ahead of numbers? What would it be?
So looking at the derivative setup ahead of numbers, it's going to be a range bound. Looking at the call put concentration data, we have already initiated an option strategy for TCS numbers ahead of numbers. So here we are doing short straddle of 39.50 strike, and we are covering this short straddle by buying a strangle of 4100 call option at 34 rupees and 3800 put option at 33 rupees. So your break even for this strategy would be around 38.35 on the downside, and on the higher side 4065 would be the higher break even for this strategy. So you have to do short straddle of 39.50 strikes, so 101 and 81, that call and put you can sell. Why we are initiating this 4-leg strategy? Because looking at the data setup, it's going to be range bound based on the data, and if we look at the major supply zone, which is placed at 4050 kind of zone, so I think post number also stock may remain in the range only. So this strategy may turn out on the profitable strategy post number if it's behave which data is indicating at this moment. Even IVs are at the elevated level around 20-25 is the range for the IVs. So that's why we are selling short straddle. So that would be the strategy one can initiate at this moment for TCS ahead of number. Those who wants to take a directional trade, so 4040, 4050 would be the major supply zone for the stock on the higher side. So that level is very critical on the higher side to cross. And on the downside, 3860, 3850 would be the major support zone on the downside. So to play range bound, we are initiating this strategy to play ahead of results.
All right, long one, but we take that. Thank you, Rajesh. Devin, if I can ask you for your views with regard to TCS as well as IT, what's your sense, what's your expectation, and what would you really be looking out for? Orders, traction, of course, but outside of that, is there something you're really looking out for?
Yeah, I think importantly, the orders are flowing in, and that is what is good news. In fact, I think yesterday, even Infosys have ended up receiving $5 billion worth of order for 5 years, and that's a large one. So that gives you a good visibility as far as the business output is concerned in the books. They need to have, I think, more such orders, definitely for sure. That is how the street would get happy about. But the fact remains that I think what are we expecting, I think, other than the order book inflow and I think the steady growth rate of 10-12% kind of thing, what we are expecting out of the business of the company, few things. How the companies are strategically planning their business into the computing space from coding space. So I think that's where one, I think, narrative is what to be understood from respective companies. Because the clients on the other side definitely are demanding more amount of computing related solutions, which is important because even today the global companies, out of them, large part of the companies are still not on the cloud for the computing requirement. That is one important aspect. Second important aspect, I think, which I believe that the newer technologies, including the AI, is requirement of the day for survival now and not for anything else. One on the efficiency side, second is, I think, on the reach to market is concerned. So certainly, I think this adoption of AI is requirement, I think, for different use cases. And that's where I think some of the clients would be engaging them. And third last point, I think, as far as I am concerned, I think we'd like to understand whether these companies would probably create platform as a service. I think for the purpose of enrolling the new customers to buy their solutions on different use cases. If that happens, then possibility of, I think, repeating what 90s saw in form of coding for the IT companies will be seen for the computing in the coming era. So these are a few things, I think, which probably, I think, I'm keen to look at and listen from the management of the companies.
And sir, just your perspective on how rich, in your view, are valuations, or are they looking reasonable at this point?
They are not far too expensive. I guess I think they are probably reasonably valued currently, I would say. And if they end up giving the surprise on the positive side for the growth, then certainly I think this valuation will stay, or maybe in some cases they get re-rated.
All right. We also spoke with Sandeep Agarwal of Soilo Investments on Q1 IT earnings. And he seems confident that this quarter will mark the beginning of the IT upgrade cycle. Listen into that.
I'm fully confident that this quarter will start the upgrade cycle. I am not even thinking of stopping of downgrade cycle. I think it will start the beginning of the upgrade cycle, and I will tell you key reasons why. See, in last 4 or 5 quarters, if you see, attrition has been consistently falling. The subcon cost, so attrition from a peak of 28-29% for even TCS for 4-5 quarters back has now again come back to 12-13% level. Second, the subcon cost, which had crossed 10% even for TCS, are now back to mid single digit kind of numbers. So all these things are huge contributor to margins. And if your margins start going up, then what happens? The comfort on executions comes significantly, and also it gives you a more leeway to get more business. So I think we, in my view, the stocks have made a bottom in the last quarter. From a stock price perspective, because markets are always forward looking, so they discount all the negative and positive very quickly. And I think this is the quarter when you will actually see upgrades led by margins. I don't see this sector, at least the large caps, are in such a shape, or the industry is in such a shape where you can see big upgrades in growth, because growth numbers are going to be 8-10% for the large names. In some good quality mid cap names, you can see 12-14% kind of growth, but the margins are the key thing. And I think margins will start picking up from this quarter. That is the way I look at the sector.
Well, while we await TCS and market close for today, let's quickly try and go back to Kush. Kush, your view with regard to Ireda, because that one is up and away in trade, blazing away. Kush, I think you're on mute.
Yeah, I'm sorry. Yeah, and there's no stopping it. Practically, a vertical rise. And even today, if you see, the move has come with some of the highest, volume figures that it's locked in the recent past. So I think, this move, even though overstretched, is here to stay. I think 300 is the next level to watch for on this one. If that's taken out, 315 is the level that you're looking for. But again, puts a bit of a, discomfort in terms of going fresh longs on this one. So this too for me will remain for only those who have an existing position. 265 is where a support zone will come in, so you can have your stop losses there. So ride the momentum. If someone does want to play this momentum, despite the overstretched territories that it's already in, then do it with a small quantity. That is what my advice would be. So 265 stop loss, the targets being 300 and 315.
Okay, thank you, Kush. Devin, if I can come to you on this one. The stock IPO'd at 32 rupees a share maybe 7-8 months back. Currently sitting at nearly 300 rupees a piece and listed at maybe 62 if I recall right. Now sitting at 300 rupees. Is this a space which you believe is egregiously valued? And any other pockets where you feel valuations are just beyond your beyond what you would be comfortable with?
Sorry, which company did you mention?
Ireda, sir. Ireda.
Well, I think sure. I think the business model of the company undoubtedly, I think, is definitely good. And maybe I think the issue also coming with a reasonable price premium. So from that perspective, I believe that I think the company has done all the right things as far as going out in the public market is concerned and leaving some value for the investors concerned. However, when I look at the current valuations and also look at, I think, the potential that these companies are offering, I find that in most of the cases, without I think particularly naming our particular company, but in general I'm talking about, in most of the cases, I think the companies are probably discounting the earnings 2 years, 3 years in advance. Now that's an area where I think I would like to be a little bit more watchful. Fact that I think this market has a habit of reviewing companies every quarter. And on a quarter-over-quarter, when you start reviewing the company, and during this particular review process, if you find slippages in 1 or 2 quarters, probably this market is not very kind in giving you premium valuation. And that's what I think is a cause for concern. Today, if you end up buying something with a premium valuation, and if the companies could not deliver the execution part of the business, then probably I think you are going to see a sharp drop and a derating in the valuation. I think that's where probably, according to me, today's traders in the market are unmindful about this particular reality in a situation. That is where I think one would like to play a little bit more cautious. But otherwise, yes, we do like the businesses of Sayta. We like the business of REC, PFC. And likely, I think the good business models, I think, which these companies have, the valuation-wise, if they don't scale up in a hurry, probably they are good business bet to make, I think, at a reasonably low price from current levels.
Yes, indeed. And now 5 minutes left for the markets to shut shop. So let's take in closing strategies as well. We got 4 ideas from our experts at the start of the show. I wonder if the closing strategy is slightly different. Kush, I'll come to you first. Your top closing strategy.
Well, SJVN is looking good on the charts. Unlike some of the other peers, in this space, this stock's not really had a V-shaped kind of a run. Even now, if you see, there's a very clear sign of accumulation for the last 5-7 sessions. So for me, SJVN remains a buy. From a near-term 155, 160 are the levels to look at. 145 is where you can place your stop loss. The stock actually moved up in the last couple of minutes, since we spotted it. But still, I think, up until 160, there's a fair bit of room. So if someone wants to consider even this as a BTST trade, I think SJVN will make the cut.
Okay, SJVN and spiking up, by the way. Some of these PSUs are having a field day today as well. Rajesh, your top closing strategy?
I think 2 mid-cap stocks. One is CSE. That stock is now trading at all-time high trajectory. The way stock has formed a weekly candle, that clearly shows that, here we can see a rally to continue. 205 would be the next target for the stock. Keep stop loss of 186. The second stock that we like is Zomato. Again, stock scaled to the new all-time high trajectory. The way stock is now holding about 200 level, and whatever minor dips which we are getting is attracting the buying interest. So Zomato can continue furthermore upside. 226 to 228 would be the next target. This is for trading perspective, and your stop loss should be placed at around 214.
Okay. So that's a couple of names to watch out for. Rajesh, Kush, thank you so much for joining in today and giving us your perspectives. Really appreciate your time. Deven, before we let you go, fundamentally, anything that you're watching out for ahead of the earnings season? One business, one set of results that you're keenly watching out for?
Yeah, Niraj, I think my close eye is on, I think, the BFSI segment particularly. And I think the likes of Bajaj Finance and likes of, I think, other corporate banks, where I believe that I think these banks have a significantly large amount of business to execute on one end because of the higher amount of the credit activity which is happening in the economy. And on the other hand, I think they are not so far expensive. I think so to a greater extent, they are having the upside or the re-rating possibility in these stocks. So we keenly look at, I think, how markets start participating and start re-rating likes of Bajaj Finance, Bajaj Finserv, where the unlocking of the valuation coming through the housing finance business at the same time, 30% kind of a CAGR growth in the credit lending is continuing, which is what market is neglecting today about. I think that's what I think we would like to see how exactly this gets played out. So yes, selectively we look at, I think, good companies to invest into market. If the market price gives us comfort, we should buy it, and we do buy into the portfolios.
Okay, thank you so much, sir, for that perspective. BFSI on the cards. Bajaj Finance, incidentally, is the top loser on the Nifty 50 today, at least as of now. But very close to close. We're up around a 0.1% or thereabouts. So we're in the green. We're closing in the green on the Nifty. In fact, 24350 plus is where we are currently trading at. So 24350, which is heartening to see. Also, if we can pull up the Sensex, just quickly look at the levels before we move to the Nifty Bank, because likely that's what's driving the positivity. Okay, we're very close to 80,000 on close on the Sensex, and yeah, there you go. 0.25% higher on the Nifty Bank. Well, we've seen some bit of swing on the Nifty Bank. Almost a 1 to 1.5% swing is what we've seen today in trade on the Nifty Bank, and that's the one pocket which has likely led the recovery today. If we can have the intraday chart on the Nifty 50 and thereafter on the Nifty Bank to just try and determine that, and thereafter we'll just quickly look at contributories. So there you go, that's the Nifty 50 chart. We've recovered, we're in the green. The Nifty Bank too, similar. There you go, almost at the day's high where the Nifty Bank is concerned, except that initial spike that we saw at the start of the day. And if we can pull up the contributories as well, if we can, there you go. So that's where the contributories are. No negative contributories, especially within the Nifty Bank. Nothing significant that we are seeing. ICICI, of course, but just about 6 points on the negative. Let's pull up the heat map, see where things are closing in at. ONGC, Coal India, BPCL continue to be the top gainers on the Nifty 50. The top losers continue to be Bajaj Finance and Tata Consumer. Some bit of recovery in Bajaj Finance we're seeing. Divis as well among the laggards in trade today. So a mixed bag. Let's look at the heavyweights very quickly. And ICICI, I can see 0.25% or thereabouts lower. We've closed. Reliance has closed flat, and HDFC Bank also down around 0.1% or thereabouts. So those are some of the heavyweights. M&M has been in focus of late. 1% lower is where M&M has closed in at. If you can pull up the sectoral heat map as well, see where which sectors have done well. PSUs in focus. Energy has done well, not surprisingly. FMCG 2 up around 1/3%, and the Nifty Bank, that's the one that's really stood out for me today, up around 1/5% at close. Nothing to complain about there. Nifty IT, we've got a host of earnings coming through on IT over the next week or so, up around 1/10%. Top laggards, pharma as well as realty. That's where we are at. Auto is absolutely flat with a negative bias. But with that, from Niraj, myself, everyone who puts the show together, thanks so much for watching.
Well, good evening and welcome. In fact, we've got just some breaking news coming in. The TCS Q1 results are out and we are just picking up the numbers. They do seem to be quite in line with the estimates. In fact, Rucha is joining me in the studio and she has more details. Hi, Rucha. Take us through what we're learning now.
Hi, yes. So TCS has just come out with the numbers. Numbers seem to be pretty much in line. An uptick of around around 1.5% was expected, but it has come at 0.8%. EBIT margin is also largely in line. Margin at around 24.7% versus expectations of around 24.5%. So largely in line. PAT is also down due to the wage hike which has been announced by the companies. PAT is around down about 4.5% on a quarter-on-quarter basis, but everything is in line with the estimates. But also, what is to be watched out for in this commentary is the commentary by the management to happen at 7 o'clock today, and we'll definitely look out for the discretionary demands, the traction in the client's budget, and what are they expecting? Are they seeing any green shoots, and how have been the deal wins getting converted into revenue?
By just looking at the numbers in detail, we are given to understand that the revenue is up about 2.2% in line with expectations. We also understand that TCS has announced a dividend of 10 rupees per share. If our producers could just repeat what they were saying.
Sure.
Right, Mr. Mayuresh Joshi on the phone line. Good evening, Mr. Joshi. In line with the expectations, give us an overview of how you're reading this.
Good afternoon. No, I think it's more or less in line with what the street was probably.
All right, we seem to have lost that audio connection. We'll go back to it in just a bit. But Rucha, of course, continues to be with us. Rucha, we were talking about the fact that it does appear at this point in time that revenues meet expectations. But the big question, Rucha, everybody would be asking is this finally looking up for the IT sector? We've been expecting it to move up for a while now. So is that the beginning, perhaps, the first result coming in today?
Yeah, I think TCS has been kicking off, and numbers coming in line might give a relief to the investors. So maybe if not a downgrade cycle, I think the earnings are likely to remain stable going forward. But we also have a perspective on the BFSI segment that the company has reported. Segment is has registered a growth about 1.4% on a quarter-on-quarter basis. But we also have our guest who has rejoined for the show, Mr. Mayuresh Joshi. If you can speak about what are your takes on the results?
I think in line with estimates and expectations, but largely will now all boil down to what the management comment is, specifically in terms of sectors, BFSI, in particular banking and insurance. What happens for factions of a recovery both of as well as retail. To that extent, management commentary will be extremely out here. Therefore, I think what probably transpires in terms of the growth outlook, specifically in the second half of this financial year, which might coincide in terms of the rate cut cycle and a global rate cut cycle.
Mr. Joshi, I'm afraid that's a very poor audio connection that we have with you. We're just going to dial you back in a minute and try and fix that. So Mr. Joshi essentially talking about the fact that it's in line with expectations. 10 rupee dividend also has been declared. Rucha, anything else that you're picking up at the moment?
So yeah, 10 rupees dividends seem to be pretty much in line with what the companies has been expecting. But as rightly Mr. Mayuresh also mentioned about how BFSI is important for the company, which contributes majority of the revenue. A positive growth, in fact, over here gives stability in deal wins not getting cancelled idly, which was the case with TCS in the last quarter. And even in the third quarter, which the company had mentioned about deal cancellations, and the demand was they were not sure about how the demand was getting through talking about deal pauses, etc., not seeing green shoots. Well, Wipro was the only one who was seeing the green shoots, but none of the companies were seeing green shoots. But we have TCS numbers in line, margins in line. Of course, margin dip was already baked in the numbers due to the wage hike, but definitely commentary from the management is what to be watched out for, at 7 o'clock today.
Oh yes, absolutely. Net profit down 3.2%. Quarter on quarter is what we are picking up as well. Anything that you'd like to add on that?
Yes, so net profit, as I mentioned about the wage hike, was baked in, but I think, you know, this was all already baked in the numbers. But as I would, as an investor, look forward for what are the comments from the management coming by. But we also have our guest who's joining back, sir. You're talking about BFSI when we lastly got disconnected. Mr. Mayuresh, over to you.
Yeah, so I think that's one important aspect and domain that TCS commentary will hold key, not just for TCS, but for the entire sector as a whole, because a lot of revenue contribution comes in from the BFSI space, specifically for the larger players as well. And therefore, what happens in terms of a recovery mechanism for this sector, specifically in the North American market, the European region as well, is going to be extremely critical. At the same time, retail, manufacturing are also the other sub-segments or segments where growth patterns and how discretionary demand, specifically from the client side, is expected to come back, is going to be critical in terms of how the second half earnings will get positioned. First half is largely a mix in terms of a hit on the EBIT margins, both in terms of a slow recovery that was anyway expected for all of these sectors, and probably taking a toll in terms of margins, at least as far as Q1, Q2 is concerned. So I think commentary across these spaces is going to be extremely critical for TCS in terms of business.
Sure, sir, got that. But we also have Rahul Jain from Dolat Capital joining us, who closely tracks the IT sector. Hi, sir, welcome to the show. And what are your takes on the IT earnings?
Yeah, of course. To begin with, from a growth perspective, it's slightly better than what we were thinking of, and that's encouraging. And it's also supported by a headcount addition, which is an important metric that we need to follow right now from a going forward perspective. This number per se would kind of set them well for the better than last year kind of a growth outlook that they shared. So from that perspective, we would say we are fine so far, but would see what they have to comment in terms of overall thought process.
Right, Jen, do you think that this perhaps is going to signal the uptick in the IT sector?
I think it would be too early to think like that. I mean, we just heard a call 3 weeks back, and they were, despite suggesting a better outlook in terms of the deal win that they signed in that quarter, they were very clear that this is not that the environment has changed much. Let's assume if we hear process from we would be glad that things are bottoming out, but is it like a swift recovery which we are going to see from here on? Could be too premature to think on.
Sure, sir. Talking about the earnings cycle, what would be your estimates on the company? Likely downgrade in the earnings estimates that your company has for TCS?
So far, it looks like in line to a small beat. So unless they talk anything meaningful negative, of course it won't be a cut. But if they talk positive, there could be a slight possibility of an upgrade. But that's all depend upon what they have to see. Otherwise, it's a small growth year. Small mixed commentary would not make any meaningful change to our estimate.
Sure, sir. But in headcount addition, I mean, that is what is likely a positive for IT companies going ahead. How do you look at the headcount addition that has come in?
Yeah, as I said in the beginning comment itself, I think headcount addition is a welcome data point to look into. The number in absolute basis is in line with the revenue growth, so it's not a great number, but yes, it's a definite direction change, which is a positive thought process to take on from. But as I said, these are such a small numbers right now that unless we hear from the management the deeper nuances on some of these aspects, I think it would be too premature to call out the directional change.
Right, sir. So what kind of deal wins are you expecting? I mean, $9 billion is what I have been hearing from the other brokerage houses. What are your takes on the deal wins this time? And do you expect deal pauses or deal cancellations as well?
I think the deal wins have not been the concern in the previous fiscal as well, and we all saw that deal ramp-up was a bigger worry because of the indecisiveness in the mind of the spender. So that outlook has to evolve. Otherwise, deal wins may continue to happen and may drive up the book-to-bill ratio, which has happened in the fiscal 24, which is much better for all the vendors compared to their 5-year average. But that has not translated into a good growth year. So again, a feedback out there could be important, whether it's 8 billion to 10 billion range, which is the typical run rate. I think we are indifferent on that range. But the conversion factor, ramp-up factor, I think that is an important element.
So talking about Americas, I mean, one of the largest segments, verticals, I mean, for TCS, down about 1.1% on a constant currency term. So don't you see an uptick over here? Even last time North Americas had registered a negative growth. So what is your take on North America as a vertical?
I think North America per se is the biggest market wherein it brings in the delta, and the piece where they have seen challenges in the recent past has been on the BFSI vertical within that market along with the tech vertical. So the flavor on those vertical is what will help us build the block on the geo perspective. Otherwise, I would always say that it's not a very macro-specific market issue that we are observing. I think it's more about the confidence on the spend, specifically both in terms of changing in the technology landscape with Gen AI kind of a mindset, and also in general macro-related uncertainty, which is causing clients to really spend lesser. I think those two aspects is where clients are more getting perturbed about. So any thought process on those lines would be more crucial than calling out a commentary specific to a particular region. I don't think that's the problem.
All right, Mr. Jain, appreciate your joining us on NDTV Profit. Thank you very much for that. So TCS Q1 results appear to be in line with estimates. We slip into a very short break. On the other side, we bring you more news, and also coming up is Profit 360. Stay with us. Market erases intraday losses to close flat as most sectors end higher. Mid and small cap indices outperform the benchmarks. TCS first quarter net profit and revenue meet estimates. Company declares a dividend of 10 rupees per share. Raymond tanks 36% at close of trade after hitting lower and upper circuits through the day. The stock witnessed wild swings as it completed the demerger of its lifestyle business. Adani Group's Vizhinjam port in Kerala receives its first mothership, San Fernando, with over 2,000 containers on it, puts India in the World League. Infrastructure expert Vinayak Chatterjee expects government's focus on infra spends to continue, encourages more private sector participation in infrastructure building, especially in the railways. IAS officer Pooja Kherkar is under scrutiny over alleged misuse of power. Sources tell NDTV she asked for a separate house and a car from the Pune district collector before taking charge as assistant collector. Good evening and welcome. You're watching Profit 360 on NDTV Profit and I'm Nupur Talwar Suri. Over the next half hour, we bring you all that's happened in the markets as well as other top news. We begin with a look at how the markets have performed today. In fact, Hersh Sayta is joining us for a quick check on what's happened on the Lal Street.
Well, while markets have closed flat from the day's low, we saw a bit of a recovery. We are down just about 8 points on the Nifty 50, as flat can get. Even the Sensex down just about 3 bips, closing below the 79,900 mark. The Fin Nifty is what drove markets lower, so pressured markets. At one point, there's HDFC, ICICI, Kotak, which were really dragging, or rather Axis, which was really dragging markets lower. But we saw a recovery in the Nifty Bank as well as the Fin Nifty. If you can pull up the graphs for the Nifty 50 as well as the Fin as well as the Bank Nifty thereafter, you'll see very similar trajectory in terms of at least the recovery. So from the low, we saw a recovery on the Nifty, and if we can have the Bank Nifty as well, there you go. We saw a bit of a recovery there, clearly visible, led by the Bank Nifty. If you can pull up the contributors, far and few in terms of significant and meaningful contributors today, and that's the texture even on the heat map as it comes up on your screen. Couple of losers which probably we can speak about, but nothing significant in terms of the gainers. The heat map, if we can, and just in terms of the ones in focus, ONGC, BPCL were in focus as the oil ministry and Hardeep Singh Puri spoke. But we had among the losers Bajaj Finance, Tata Consumer, Divis, again just about 1 to 1.5% lower. So nothing significant or meaningful even among the losers. Let's quickly pull up the heat map of the sectors. And the PSU basket again continues to be in focus, 1.1% higher. The energy basket also closed mildly in the green. As well as the bank index also closing mildly in the green. IT will be in focus as well. That one also closed mildly in the green. Realty, Pharma were the two top laggards in trade today.
All right, Harsh, thank you very much for that. And on that note, here's a market voice. Manish Sonthalia of MK Investment Managers spoke to NDTV Profit earlier this morning. He said that most sectors are overpriced and one has to pick stocks of value in the current market.
I was just doing some numbers. India has some 57 sectors. And, if you take the mean valuation of each of these 57 sectors, I mean, hardly 10% or 5 or 6 sectors would be at some comfortable valuation zone compared to the last 10 years mean valuation. The rest 50 sectors would be trading at higher than 10-year average mean valuation. So that is the state of things as we speak. And SIP flows, which is basically your smart institutional money, keeps piling on 20,000 odd crores SIP flows. I mean, as long as that continues, you got to pick and choose between the broader markets. India has a long runway to go from here. Obviously, the medium-term outlook is definitely bullish, and even the long-term outlook. But problems in individual sectors will remain.
And we also spoke to Sandeep Agarwal of Sowillow Investment on Q1 IT earnings, and he's confident that this quarter will mark the beginning of the IT upgrade cycle. Listen in to what he said.
I am fully confident that this quarter will start the upgrade cycle. I am not even thinking of stopping of downgrade cycle. I think it will start the beginning of the upgrade cycle, and I will tell you key reasons why. See, in last 4 or 5 quarters, if you see, attrition has been consistently falling. The subcon cost, so attrition from a peak of 28-29% for even TCS for 4-5 quarters back has now again come back to 12-13% level. Second, the subcon cost, which had crossed 10% even for TCS, are now back to mid single digit kind of numbers. So all these things are huge contributor to margins. And if your margins start going up, then what happens? The comfort on executions comes significantly, and also it gives you a more leeway to get more business. So I think we, in my view, the stocks have made a bottom in the last quarter from a stock price perspective, because markets are always forward looking, so they discount all the negative and positive very quickly. And I think this is the quarter when you will actually see upgrades led by margins. I don't see this sector, at least the large caps, are in such a shape, or the industry is in such a shape where you can see big upgrades in growth, because growth numbers are going to be 8-10% for the large names. In some good quality mid cap names, you can see 12 to 14% kind of growth, but the margins are the key thing. And I think margins will start picking up from this quarter. That is the way I look at the sector.
All right. Now, first it hit a 5% lower circuit, and then it swung the other way and hit a 5% upper circuit. I'm referring to the Raymond stock. After the demerger of the company's lifestyle and real estate arms, the stock witnessed some wild swings today. Let's go across to Anushi to understand what happened.
Raymond shares witnessed wild swings post its lifestyle business demerger. Now, if you look at the overall course of the day, the company had hit a lower circuit in the early part of day, but from there on, it recovered and hit an upper circuit at a 5% limit, and this was at a price of about 2001. Now, this what we are looking